Welcome to Caching Waves. This is an Elliott Wave update for Hbar. Now I'm going to be looking into this bottom potential pivot at the moment. But before I get into that count, I want to show you previous bottoms and how they formed and what they looked like, so you can get an idea of what to expect over here, so you don't get scared by every move or change your mind over and over and over again. I know what it's like being a newer trader, and these are things that constantly go through your mind. So I'll do a little exercise to show you, and I would actually suggest you do this in any asset you are trading, because it can just give you some confidence as well as know what to look for that specific asset. A lot of assets react differently, like XRP does a lot of three-wave patterns. So you want to see how those bottoms have formed in the past, because they tend to somewhat mirror each other. So as of right now, I'm going to go into all these bottoms just to show you the pattern on the bottom. But real quick, I have a off the low, an ABC. We got an impulse diagonal for our ABC in a W wave. We then had a WXY for our corrective X wave, looking for a Y wave to the upside. Should take about the same amount of time as this one off this low. If the pivot holds, that gets us up to about 23 cents, which would be a pretty nice, from this price, 240%. Nothing wrong with that. So that's currently my primary count. Alternatively, this can also still be a valid 1-2-1-2. Just keeping that in mind. There'd have to be quite the news catalyst to change this pattern to a 1-2-1-2, but it's not my job to think I know what's going to happen. I just have to look at what is valid, right? If that was a 1-2-1-2, that'd be pretty explosive. Okay, so I'm going to show you the potential bottoms from the past, and I'm going to do the replay function. We'll go down to the 1 hour and the 15-minute and see how they formed. So down on the 1 hour, we can see pretty much the only tell on RSI we got was the divergence here between this micro 4th and 5th, where we got a lower low on price and a higher high on the RSI. That was our only tell, and it was that close of a time frame, right? You can count out 5 waves here. 1, 2, 3, 4, 5. So that was an early indication that the bottom could be in. We didn't hit off our bottom trend line in the ending diagonal. So that was your only tell. Early indications to get into the trade, I always mention this to you, is the break of the previous 4th. Look for a 5-wave pattern and support at the 4th wave, right? Look for a nice 3-wave pattern. Look for the 1-to-1, and your entry would have been something like this if you spotted it. That's why I repeat the same things over and over again. Now let's go down to the 15-minute. You can see you didn't have much to go on, just that divergence and a potential 5-wave pattern. This is a pretty clean 5-wave pattern. You can see the 3rd of the 3rd, peak at the 3rd on the RSI, and divergence between the 3rd and the 5th, most volume in the 3rd. So in real time, I would have labeled this as an ABC, or sorry, a 5-wave move. See how our targets did. Would have put on my pivots and looked for the 1.618 first for our 3rd. We came by that, came to the 2.382, so it was quite an extended wave. At this point, I'd want to see another wave up before I get confident on my trade setup, right? I'm sure I would have made a video saying this can easily do this. We can make a diagonal, just so you know what to expect, right? So clear 5-wave move, and it could, let's see if it hits the 618, pretty close. I would also consider the fact that this could be corrective in nature as well. It's perhaps a WXY, although it really does look like a 5-wave. But I would at least keep in mind that that could happen. This could be a WXY, and I'd be looking for something like this if we got a 5-wave move to potentially make a new low. How was our channel? 1 to the 4. You can go off the 1 or the 3 for your channel, off the 2 and 4. And would have been targeting, I wouldn't have been targeting the 1 to 1 of wave 1 because it doesn't make a new high above wave 3. I would probably be looking for the 618 extension of 1 through 3 off 4, which we just came shy of. But I'd also be counting the waves here as well, and probably put my stop somewhere around this area if I was playing it. Okay. Once our 5 waves are complete, I'd put on our Fibonacci level. I'd be looking for 382 to the 618. As you can see, we came through that. So I want to show you how guidelines don't always work. That's why we have our stops at the pivot low, right? Can't get too confident on guidelines. Okay, so you can see we came through the 618, which isn't necessarily a good thing. And we'd be second guessing this trade the whole time, right? But we'd still have our bias to the upside. I would see this, and I would even consider that the low could be in. Right here. Reason being, I'm assuming that's a 618 in time. I'd be looking in this zone in time, 618. So this would probably be my first entry right here. And I would look to leverage up my trade on the break of this B wave. And if we broke through that, I'd have a trigger order there, and my stop would have moved to this low. It didn't get triggered. And this is where I'd be getting a little bit concerned that perhaps this is a correction, because this is clearly looking like it's failing, right? At least needs one more move to the downside. I'd have this ABC. It looks like this ended up being a flat here. And another ABC for a double zigzag. See how our extensions came. The 1.236382 area, which is good. Get rid of that 50. And at this point, we'd be obviously underwater a little bit. That was our entry originally. And what I would do here is again put my trigger long, as in I'm market buying above that level, the high of the B wave, if this took a pivot here. And the extra equity I would use is the difference from this stop loss. I'd move my stop loss up to here if we came up to this level. So I'd add a little more capital. At this point, when we break out, I am entered long, leveraged up right above that level, and stop moves to this level, like so. So you can see how we kind of navigated that area, even though we weren't extremely confident on that. We're just using invalidation levels. We're triggering long at the break of the B because this would most likely be impulsive after that, right? So ask yourself, would you have called this a 5-wave? Would you have given up when this gets stopped out? Using our guidelines, we came past the 1.618 extension, right? So just wanted to show you how this bottom would have formed and ask yourself, would you have stayed in it? And how would you have traded it? This is how you get better at these things. WXY, we even came through the bottom end of the channel as well. But you can see we passed the 618, but we held the level. We extended extra long in time, but we still made the move. So this is where it's good to keep in mind all the guidelines, obviously, but the pattern is the most important. That's why I always say look at the pattern, right? And then we take off. And why it's so important to get as low to the bottom as you can is that the example is right here. Look at our next one too, right? Barely retraced at all. Very tough to catch that. If you're waiting for the 1 2 1 2, you put your buy at like the 50 down in this area, right? You're not getting that. It's gone. It is gone. And off it went. Believe the next time you actually got an entry is if you had this as a 1 2 3 4. You could buy the 4, stop at the 618, next move to the upside. Okay, so that was the first bottom. That was this one right here. And it moved, if you had gotten that area, 150%, right? In 40 days. That would have been a pretty nice trade. Depending on your entry, that would probably be 3x your account size for 1% risk, as long as you leveraged up and raised your stops on the go. Anyways, let's go to the next one. It's this area here. I tried to find what were 5-wave patterns as well, so we can get the exact bottoms, right? I didn't go over here because this is more of a 3-wave move. So let's see. This is one of the only corrections. I still remember posting this video on YouTube. I was waiting for this move to the upside forever. You can go back and see those in September. From this zone, I remember just grinding. I'm like, we have to get this move. Because I had this as a completed correction as the WXY. And it ended up being a WXYXZ, which is kind of annoying. They're very rare patterns, though they do happen. But it was like a WXYXZ. I missed, and yeah, that was pretty annoying. So this would be our bottom. But we still got it eventually. It's just that annoying spot right there, that one more wave to the downside, right? Okay, let's go back. Sorry, would we have seen anything in our indicators? Yep, we have bullish divergence there on the 4-hour. We had divergence as well on the 1-hour. On the 15-minute. Not really. So you can kind of see how you have to go by time frames here. Look for your corrective patterns completing and see the reaction after that fact. But you can see down on the 15-minute, there's a lot of noise. Let me see how I would have counted this. And ask yourself, would you have caught in this bottom? Looks very 3-wave-ish, right? In fact, this actually looks like the current correction we're working on right now, doesn't it? On the daily. It looks exactly the same. WXY or expanded ABC. Looks the exact same, right? Why do you think I'm trying to catch this bottom on the daily? Okay, so down on the hourly, I'd be looking for, in real time, I'd be waiting for this bottom to break this level first, then this level. This is pretty tough count. 1, 2, 3. This is part of a diagonal, most likely. Yeah, this is more of an expanding diagonal at the end. There was our fourth wave of the fourth, 4, flat, ABC, 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 ABC. Yeah, it was more of an expanding diagonal. This is why it's good to go back though and take a look how it happened and would you have caught it. But my earliest indications are the breaks. It would obviously be of this level then, the fourth. I'd look for a 5-wave move. I don't really see much there. Really don't. It would be a 1 to here, running flat. 1, 2, 3. This would be a triangle, 4, 5. So that would be our third, fourth, and this looks like it would have to be a diagonal. But you can see it's pretty ugly, right? Very ugly. Even our extensions came between the 618 and the 1-to-1 of the entire move. Very ugly, very, very ugly. This could also be a running flat here. Yeah, that's possible as well. But you can see this ugly move. 3, 3, most likely 5. 1, 2, 1, 2, 3, 4, 5. Yeah, 1, 2, 3, 4, 5. For a third, fourth, 5. Yep, ABC, most likely. And you can say, okay, what was our extension? Just past the A wave. Not even to the 1.236, but minimum requirement in that expanded flat was just to break this low, right? Then reverse. And if you see this 5-wave move after this 3-3, you'd be pretty confident that was coming. So I would put this as not very likely, but a potential 1 and a potential 2. All right, because this can easily be a WXY to here too. Very difficult. But I'd be waiting for the break of this level in real time. I'd be waiting for the 50 and the 618 of this second one. I'm being honest with myself. I wouldn't have gotten that. Missed that entry. Even our third wave there came up a little bit shy. Yeah, this looks actually like a diagonal. Not a very pretty one though. I would count it both ways though. I can count it as a diagonal or a 5-wave move. Retracement came to the 236. Just past the 236, as you can see. So in real time, remember I was looking for that massive move to the upside. Reason being is I saw the correction complete completing over here. So I'm looking for a much bigger move than that. So that would be where my head was at in real time. And so I would probably, the way I would actually play this is I'd be calling this either a wave 1 or a wave A. I would have figured out this flat 100%. It just makes the most sense. I'd be calling this a 1 or A. So the way I would play this, because I missed this move, right? I didn't get the 50. That's why sometimes I mention by the 382, the 50 and the 618, 1/3 at each level, because if it comes up shy, at least you get a piece of it to begin with. But what I would have done is look, I would for sure be labeling this an ABC. That would have been my label. And looking for either a takeoff, most likely the takeoff I was looking for. So I'd be comfortable buying the break of this B level. So I have multiple strategies depending on what pattern I get, right? It all depends on what pattern I get. It's nice to say I would have bought this off this first wave, but I can't say that confidently. I might have, but I for sure would have bought in the break of this B wave, and my stop would have gone on this level here currently. And if I wanted a little bigger, if I was confident on the upside, these are just different situations where your mind's at, how confident you are on the previous pattern. Because of the shyness of these retracements, I might consider just putting my stop just past the 618. I usually choose the 6.6, only to get a larger position size for my 1% risk. So I can put my stop there. But you can use indication, right? Because you see how shy these retracements are all the way up. So that's our second bottom. See how ugly it is? Could you have gotten that? Be honest with yourself. All right, get rid of that one. We have one more. Oh, I remember this one. I think we got this one. We were in it, right? From what I can recall. There's our bottom. I remember because it was a slight truncation, which was kind of annoying. This was an ABC. This is our final 5 waves because it was 5 waves clearly. And that was our truncation. Now this one is kind of similar to what we have right now. I would have called this in real time. We see an ABC, ABC. So I'd say this is a WXY or a, we'd want to see one more for the diagonal to complete, right? And then we'd look for a pullback. I want to see the measurements here. I'm just imagining if I was in real time seeing this. I usually look for the 618 and the 786. So this would actually qualify right here. In real time, I'd be looking for, yeah, in real time, I would have labeled it like this. I can say this confidently. See the spike here, ABC. We got overlap for our 4th. I'd be looking for a move up like this. I would have drawn my trend line like so. Want to see some slight overthrow. Peak at the 1, divergence between each peak, as you can see on the RSI, declining volume, and there's our correction. So how I would play this in real time, I didn't get my entries because I'd be looking 382, 50, and the 618 if I were buying this for the long term. The only time I really do that is on a wave 2, wave 1 and 2, when I buy the 382, 50, and the 618, stop at the low, again because of these things that can happen here. You usually get a 382, but clearly this was quite bullish. So if I miss that, the way I would play that is the break above this B wave. Stop at this low. Alternatively, I'd buy the breakout of this B wave and stop at the absolute low. Reason being is this is a 3-wave move. We can get a 3 up and come back down. Right? Not a lot of time has passed. You saw the previous bottoms. You can get a 2.618 and this rally just fails. We need another wave to the downside. So your safest bet is stop at this low, buy the breakout of the B. If you miss this buy, so you'd be buying somewhere right here on the breakout. Or if you want to get maximum exposure, you're considering this a breakout as either another 1-2 or a third wave, and your stop goes here. So do you want to make sure you allow more patterns to exist, because then this is your stop loss area? Or do you want to accept the fact that you're going to lose more often, but when you win, you're probably going to win. You're probably going to have 3 times the position size here than here. So you're going to make a lot more money. So these are things to consider. There's no right answer. There's only trade-offs, right? I probably would have put my stop here and been okay with entering again if we come lower. Okay, so I see this. In real time, I would consider this probably another 1-2 as a diagonal. So I'd be in my trade, stop here, right? I'd be labeling this a 1-2 in real time. But at this point, when this is a 3-wave move, and then we overlap with wave 1, I have to relabel that. And I would consider in real time that it's perhaps another diagonal, or we're about to collapse, right? And this is actually something more complex as a corrective pattern, and we're expecting further downside. But that doesn't change my bullish trade setup, right? My stop is still at this low, my original entry. So it looks like we ended up making another diagonal. Check our measurements. You can see how they change a little bit. That one came to the 1-to-1 and the 1.236. And then our wave 5 compared to our wave 3 was that 618.786. So that spike kind of kept us out of the ideal area, but guidelines worked pretty good there. So in real time, I'd see this. At this point, once the structure's shown itself, I would call this another 1-2. So what's my strategy moving forward? Well, depending on my count here, I think this is a finished correction. I'm looking for a 5-wave move, right? I see this. I'm like, this is potentially very bullish, or it's going to collapse. And ideally, I told you I was look for the 618 for second 1-2. Between the 382 and the 618, depending how bullish the first 1-2 is. That's a great contender for second 1-2. Came to the 618 extension of the first wave 1. So what I would consider at this point is, do I want to leverage up? How confident am I on this? Because if I can leverage up again, I can buy the breakout again above this B wave, if I consider this a completed correction, and my stop can go on the second 1-2 wave. So I can take all this risk, it was right here, all this risk, we're actually in the profit now. I can move my stop and have the entire equity of the original trade to throw at it at the break above this B wave, right? So that's something you have to decide in real time. I can't make that answer for you. Or you can just let this run, right? You still have your stop here, your original 1% risk, or you can just let it run. I usually leverage up myself That's how you make big money when you get a read correct. So I would have leveraged up here, stop here. Again, I only have my original 1% risk, and I've probably been able to, at this point, 3x my original position size. If I can do it again, I'm probably doubling my position size again with the original 1% risk, right? So that's kind of the way I look at things when I'm trading. So I would have leveraged up there. I can say that for a fact. So let's play that. And boom. Once we leverage up, stop goes at this low. And now I'm fully in the trade, right? And at this point, this is 1-2-1-2. We know we should be getting massive volume, massive peaks of the RSI. We know this, right? We know this in advance. So as I'm managing this trade, what I'm doing is the whole way up, as we move, I'm moving my stop, 618, 618, 618. We move higher, moving my stop to the 618. Reason being, that's the invalidation of the, that's the probability shift in a fourth wave. You shouldn't come back to that level. Invalidation is actually at this 1-2, at the top of this second wave 1, right? But I would use probabilities here. I'd keep raising my stop to the 618. We're going, we're going, we're going. Just gonna pause that. We'd be at the 618, stop. And see, we're still in this trade. We would actually label this in real time. We have our 1, 2, 1, 2. We'd label this a 3 for sure. This is our 4th. And our 5th of our 3rd. So at this point, we're looking for one more wave to the upside, right? And we're up pretty significantly at this point. A lot of chop. We're not worried. Our stop's at the 618. I'm not sure which targets these were. Something from earlier. That has nothing to do with this wave. I would have, in real time, called this most likely a WXY, or I'd move my 5th wave over here as a diagonal. So I'd call this either the top of the 5 or wave 1 and 2 of the 5th. I would probably be getting out somewhere in this area. I'm looking for another 1, 2, somewhere in this area. Holy shit, sorry, this video is 33 minutes long already. So I would have gotten out somewhere in that area because I would have had a completed count. Okay, so that is, sorry, I gotta get moving here. I didn't realize it was so long. And as you can see, that was the area I just counted all right there. We got out right here. We would have gotten out either here or right there. Very close to a top, right? I tracked this actually in real time. You can go back on YouTube. We ended up trading all this, but just wanted to show you that. Interesting, right? You can see how our perspective changed many times. We were doubting ourselves, but we have to go with our read that we're going to the upside, and we're playing this as a 5th wave, right? Okay, so let's go to where we are right now. No divergence. We have a completed count as a ABC, WXY. We had our 3-wave move here, X wave up. Remember that one I showed you earlier about that flat? Would we have gotten it or not? And we hit the 1-to-1 of where wave 1 equals wave 5. We are at the just shy of the 1.618 extension of W off the top of X. So in this area, I'm expecting a pivot and potentially very high targets, up to like 23 cents, right? Good moves. Sorry, all this is a little bit messy. Let me get rid of some of this so you can actually see it. Get this off the minutes. Get this off the minutes. Whoops. Okay, so you saw previously, sometimes we went past the 618, sometimes we hit the 786. Of this 5-wave move to the upside I have right now, it trends pretty nicely. Pretty nice separation with our 3rd wave. Looks like a triangle 4 and our 5th. Can this be counted as a double zigzag? It would have to be ABC, X, ABC. Unlikely. I think it's more of a 5-wave move because we didn't hit that 618 extension. So I still like this as a 5-wave move. Might have to change that eventually. I'm not sure. Again, it can also be like that rare one I showed you. It could be a WXYXZ, although it doesn't look like it whatsoever. But again, it's not my job to assume what's going to happen. It's just what's valid, right? So this is a 3-wave move in my point of view. Remember, we had those diagonals. This can be a 1-2. This is possibly another 1-2. Well, it would have to be right here, ABC. Not the prettiest. How was our extensions? Looks like the 618, 786, what we look for. That's nice for the 3rd. Do we get that for the 5th? Looks a little bit shy. Didn't quite hit the 618. So this can be a diagonal. It can also be a WXY. So that's assumptions we have to understand. No clear separation here. So my assumptions at this point is this can be a 1-2-1-2. That is possible. But in this situation, I'd want to wait for a break above here, and I'd put our stop at the low wherever this ends up pivoting from. I'd play that as 1-2-1-2. My stop would go here. That's what my plan is here. I'm already in this from a little bit lower prices, but I'm just thinking about how I would leverage up at this point. This can be a 1-2-1-2. This can also be a W wave. We have a WXY, and we get another 3-wave move, ABC. Can also get that. If that were the case, be looking for the 1-to-1, which takes us, look at that, at the 786, exactly like I drew. If we get that, again, my stop's at this low, giving it the maximum amount of room. If we get that, I'd wait for the break of this X wave, so this would be a WXY, and my stop will go wherever that pivot is, and I'll buy the breakout, leverage up whatever equity I have here. If that happens and we get another 1-2, I'd do the same thing. The B wave, stop, go here. Leverage up until we get it. Now, if you remember the last corrections, there was many times where we came to like the 2.618 extension. We just keep extending out in time, and eventually it goes, right? Eventually it goes. So don't get too hung up on your guidelines. Just pay attention to shape. Look at the possible patterns that can play out. And right now my bias, because of these 5 waves, because of these sideways moves, is we need a move to the upside. Now, could this be a wave A or wave 1? Yes. Do I know which one? No, I don't know. What I will say is on the daily, we have a possible X wave complete on a very large trend. That is a very good thing to be a part of, right? So we will go to the larger time frames to say, if this is the pivot, this is the big pivot that we want. All right, guys, sorry I dragged on so long. Just really wanted to give you some knowledge of what to do when you're looking at an asset. Really look back at previous ones and see how they panned out so you can get some clarity of how they should look. Because everybody in Elliott Wave has this idea that it should be, you know, 1, 2, 3, 4, 5, right to the 1.618, right to the 382, right to the 1-to-1. Get this perfect ABC as a zigzag, right at the 50, and then we go. Very rarely what we get. That's why I get pretty excited when I see a pretty clear 5-wave pattern, because they are pretty rare. If it was easy, no Elliott Wave trader would ever be wrong, right? If it was easy. That's why we always have alternative counts. I focus on shape more than anything, and I find that's the most helpful. All right, guys, that's it for this one. Thanks for watching. I'll see you on the next one.